Good morning, trading world. It is December 20th, 2021. It's 7:11 a.m. on the East Coast where I am. And this is my pre-market outlook. Today's pre-market title is captioned, "This is an emergency. This is not a drill." A little humor for the dip buyers and bulls out there. Let's get into it. Last week's video ended with me saying how important the close would be, and I quote myself, "Today's close is important. If we fade going into the close, we could come into next week with a huge gap down. So be careful." All right, people, look at where we are now. When I woke up this morning, we were over 50 points gap down on the S&P 500. That is a very, very large gap. So hence the caption, "This is not a drill." We are headed to a correction. Now, coming into today's open, be careful. Do not short into the hole because we have a very high probability of bouncing at the open. Sit back, wait, be patient. Wait for a retest of a resistance level, or wait for internals to at least close the gap and become more rational as the morning progresses. So a lot of times I am very technical, and since I've started sharing my analysis, a lot of things that people probably won't get is that when things get crazy, I kind of rely on a feel of the market, and that feel has to do with how internals react after they become after they close a gap or become rational when the morning progresses, and the VIX. I lean heavily on the VIX because these days like this, we are going to see backwardation where all the risk is right now. So this is what I will lean on. Coming into this week, the expected move on the SPX was 90 points. Now, a 90-point expected move is more than what we had last week. But the kicker is that this week we only have 4 trading days. Now that alone should tell you how crazy it's about to get this week. You can try to take advantage of the bounce this morning, but I don't recommend it. You have to be super fast and quick on the draw if you try to do that, because when it flips, it is going to flip fast. There is going to be no warning, and it is just going to go. So getting out of longs and trying to get into shorts is going to be almost impossible. Even with me, the way that I like to plot stuff on the chart to just hit when it, just tap me in when it hits certain levels, it's going to be hard to do. So I don't recommend it. For me, I'm waiting on the short side, or would rather wait on the short side. And I will be doing and loading up the boat with various bear put spreads and just straight long puts, depending on the accounts that I'm putting to work. And I am putting a few accounts to work this morning, and have been for the last week or two. Let's get into the key levels. All right, here we are with the key levels to watch for today. However, I repeat, from this point, levels are somewhat less important, and the feel of the market, meaning the VIX and market internals, are more important to lean on to watch for turns in the market, because when the market gets angry like this and we're on a bender like this, there is no telling where we could go. So again, I say levels are less important. It is more important to watch market internals and the VIX. But I'm going to put this out as a guideline either way. When it comes to resistance, the Jack resistance level I'm watching is 457. The Queen resistance level is 461. And the King resistance level is 463 through 464. Like I said, please do not short into the hole. It is likely that we get a bounce. And when we get a bounce from a move like this, it will be very sharp and it will cut deep, so we could run very far, very fast. Now, on the other side of it, we are likely to reverse very fast, very sharp. So, support levels that I will be watching. 451 is the Jack support level. We are likely to get a revisit after the opening to kind of give you that head fake that we're going to go lower. So somewhere around that 450, 451 level, be very careful, because we could take off and run. Queen support level I have at 448. Now, when I say 448 and then the King support level that I'm looking at, 440 through 426, that is a very, very, very large margin. When I put this up there, I am thinking about the rest of the week, because I may not have time to come on and do another video tomorrow, depending on how things go for me. But I want you to be watching out, because this is when things could turn somewhere in between this level, 440, 426. I guess let me kind of give you a view of what I am preparing for. At open, I suspect we get the head fake down somewhere in this area, and then boom, we're going to take off somewhere back up here, and maybe even a little sideways chop, but mainly on the way up we may chop. But at some point in time, and for the rest of the week after this, we are headed there, and it may take us the rest of the week to get there. But look for today to be the sharp crease back up, but be careful. And if you are not already short, this is something that's going to be hard to jump in front of, buying straight puts. So I recommend doing put spreads. buying the high strike, selling the low strike. It limits your risk to a degree and still defines the risk. So this is pretty much what I'm saying to be prepared for the rest of the week. Maybe Thursday we level out. It is possible that this morning we don't get that big of a bounce and we just roll over pretty fast, but I'm going to be watching internals. Internals are going to tell you the VIX. Watch the VIX. Watch for when we hit support on the VIX. And if we don't get this bounce here, there's going to be a sharp fall the next 2 days, and watch for the beginning of a sharp bounce going into Thursday. So that's pretty much how I see it. This may be a little exaggerated, but that's the feel that I get for the market right now. It is angry, so prepare for the worst. Now, before I go, I want to show you something just to be prepared for. And in order to show you this, let's go to the daily chart. It doesn't look like much here, but we need to be prepared. Today, we're going to test. Let me get that off. We're going to test more than likely this level, but don't be surprised at the end of the week if we don't test and drop below this level here, which brings us to the 433 area. If we test and push below, so around this 442, you can expect a gasp of air where we come up and maybe a small bounce. But this appears to be where we are headed. So I just wanted to prepare you, let you know the things that I am looking for. So again, you've been warned. Be very, very careful, because it could get crazy this week. As always, know and define your risk. Risk comes first. Profit and target comes second. Wishing you a successful day of trading. Happy holidays and have a great day.